Hi, this is Marie from Legacy Publishing. Today we are going to focus on the wealth building formula. Chuck, can you explain to our viewers what the wealth building formula is and how it is measured?
Marie, the wealth building formula is a simple but effective method for selecting stocks with the greatest profit potential. In my experience, the wealth building formula is the single best way to build long-term wealth. I discovered this unique method many years ago, but as far as I know, there is no other book that uses this type of approach for selecting profitable stocks. There are many ways to select profitable companies, such as earnings growth, sales growth, cash flow, return on equity, and low debt-to-equity ratios. The wealth building formula takes all of these methods into account with one simple measurement. When you purchase a stock, you become a partial owner of the company and own a percentage of the company. The value of your percentage of ownership is known as stockholders' equity. Stockholders' equity is essentially the net worth or cash value of a company and is calculated by subtracting the debt of a company from its assets. If a company is liquidated, then stockholders' equity would equate to the breakup or liquidated value of a company after all the debt is paid. My historical research led to the discovery that companies that can grow their stockholders' equity at a fast rate are the most successful and profitable companies available in the universe of publicly traded companies. Historical price data shows that these type of companies produce the most returns for their shareholders over time. Stockholders' equity represents the true value of your stock. If a company can grow its stockholders' equity at a fast rate, then the true value of your stock is also growing at a fast rate. I discovered that there's a strong correlation between growth in stockholders' equity and stock price appreciation.
Chuck, can you show us some examples of companies that are growing their stockholders' equity at a high rate?
Marie, Fairfax Financial would be a good example of a company that has a high rate of stockholders' equity growth. Fairfax is a Canadian insurance company. Since its inception in 1985, Fairfax has grown its stockholders' equity at a 24% annual compounded rate between 1985 and 2009. Fairfax's stock price has also shown a strong annual price appreciation. Since the stock started trading on the New York Stock Exchange in December of 2002, Fairfax has produced a 386% total return. Now, more importantly, Fairfax has prospered during the financial crisis over the past year, producing a positive 77% return versus a 22% loss for the S&P 500 index since September of 2008. The Fairfax stock price has closely followed the growth of its stockholders' equity. My actual trading experience and historical research demonstrates that there's a strong correlation between stock price and stockholders' equity. Historically, the market price of a stock normally follows the increase or decrease in stockholders' equity over time. Annaly Capital would be another example of a company that has a high rate of stockholders' equity growth. Annaly Capital is a real estate investment trust that invests in government-backed mortgages. Annaly Capital has grown its stockholders' equity at an average of 127% annually over the past 3 years. Annaly Capital's stock price has also shown strong price appreciation with a total return of 147% over the past 3 years. Annaly Capital has produced a 713% total return over the past 12 years. Now, Annaly has also prospered during the financial crisis over the past year, producing a positive 52% return versus a 22% loss for the S&P 500 index since September 2008. So to summarize, as a company grows its stockholders' equity, the true value of your stock investment also grows. Growth in stockholders' equity creates economic value for its shareholders. Ultimately, this is the reason why we invest in stocks and what separates stock investing from all other types of investments. Growth in stockholders' equity has created trillions of dollars of economic value to shareholders and is the foundation of a capitalist economy. The ability of companies to increase their stockholders' equity has always allowed stocks to outperform all other types of investments.
Chuck, how can our viewers learn more about the wealth building formula and how to calculate the growth of the stockholders' equity?
Marie, the wealth building formula is fully explained in my wealth building formula book and DVD. Viewers can order my wealth building formula kit by calling 888-233-1431 or online at wealthbuildingmachine.com. The cost is $95.
Well, Chuck, I hope our viewers were able to gain some insights into the wealth building formula. I want to thank everyone for viewing, and I am looking forward to our next presentation in 2 weeks.